Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, December the 4th, the year 2018. Let's talk trading. Trade what you trade best. Yesterday, we talked about what losing means to you. And one way to avoid losing is to trade what you trade best. There might be an instrument, whether it's a stock, a commodity, a forex pair, oil, gold, soybeans, pork bellies, baseball cards for that matter. But trade what you trade best. You might trade best the London session best, so trade the London session. There might be a particular method you trade best. Doesn't have to be one of mine. But if you do really great with the buy zone, trade the buy zone. If you do great with the wick zone, trade the wick zone. And even if you do great trading with squiggly line crossovers, if that's what you trade best at, do that. So just take a look at your trading, see what you trade best. Now, I didn't say what you were most profitable at, because we can all have those streaks where we trade something and we make money, so we think we trade that the best. No. What I mean by trading best is where you stick to your plan, you don't rush your entries, you're not late for entries, you don't chase entries, you don't chase price all over the chart. You don't over leverage yourself, you don't forget your money and risk management. It's where you do most, if not all, of the things the way you think they're supposed to be done. That's what you trade best. So if some pairs make you jumpy and other pairs you're calm and relaxed, well, you know which one to trade. And as I mentioned, make sure you're always using your best money and risk management. It's not that difficult, just two simple formulas. You do this one, then you either do this one or this one, and it's over. Okay, what do we have here? We have the euro yen dropping down, making a new low for the month. Look at that. 128.00. And if we look at the weekly, we see we have picked up one or two gaps. It's Tuesday. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9 gaps still open. And as we're watching, we can see here, anybody taking that crossover to the south side would be getting paid off. We are entering the lower wick zone on the weekly. On the daily, you can see here we had an explosive move out of that daily low. Yesterday was an inside bar. I think I may have mentioned that, or was looking to be an inside bar. But you can see right here what happens, exploding out that daily inside bar. You can see it happen here too. Nice move outside of that inside bar. And range-wise, we've got 1, 2, 3, 4, 5, 6, 7 pairs over 100, with the dollar yen clocking in at a respectable 92 pips at the moment. And you can see here it's pretty much been a down day for euro yen. Okay. We had a buy zone trade here. The pivot point was right there in the short zone. I mean, we got one signal that hour, one signal, and that was it. Rats, get prepared right here for a rat reversal. Out, green rats, out of the green rat zone. You can see here looks like we're going to come down to weekly S1 at the 127.85 level. On the daily, we still have those two missed pivots. For some strange reason, price just doesn't seem to want to cover those pivots anytime soon. For 17 days and 45 days. Okay, now Larry live trade. We got a 3-ball, so next hour, about 50 minutes, we'll be looking to go long on a green candle at one of these lines. Right now it would be the double O, but if it pushes below 90 and closes there, then it would be the 27.90. You can see here selling, lots of selling took place there. Once again, pretty much just candle color at the line for profit. And somebody was asking about, I think they might have already answered this, but I think I saw the question again about, where to start, what symbols. Well, I like dollar yen and euro yen. Dollar yen because it's very predictable, even though the range has been drying up over the past few months. That's why I switched to euro yen as a main trader, just for the range. Euro yen trades well through all the sessions because of the Japan part. It trades great in the Asian session. And then during London and New York, while London we got the euro, and then New York we got the dollar, because this is a hybrid between euro USD and dollar yen. So euro USD, USD yen gives you euro yen. Okay, here wick zones, it was just pretty much all wick zone, but once again, price does not like staying in the wick zone. I know, broken record, you hear it all the time. And here you go, we've got a holo set up at 128.19, looking for a buy, but we have to wait because right now we're nowhere near that. Possibly getting a new holo, a new lower open, H1 lower open at the end of the hour. We'll just have to wait and see. Inventory reduction, you see there was a short here at 60, another signal at 54, and then later we had one at 45. And just couple of minutes, last hour there was a short at the 28.20, and you can see it's good for 29 pips. And you can see on one of my favorite trading screens, for those of you who want to know what I like to trade or what to trade, just the previous day, week, and month, open, high, and low. I just like to trade those crossovers. Simple trades, usually profitable. And for those of you wondering what the magenta diamonds are, that's the previous candle midpoint. I use that as a bias. So you see here it opened below, cut above, came back below, opened below, just as a bias which way to trade. So for example here, since this candle opened below, it was right at the line. I'm not looking to make a big gain on these. You can see here it opened below, so the gain would be to this side. So in other words, it's preferable to trade away from the midpoint and not towards it. And when you're at the midpoint, then you trade the crossover, which means you'd be trading away from it. Okay, you can see what happened back here. Price got below the peak of the bid. You can see here a little buying kicked in, but then selling, turn right back in. A little buying here at the moment. And then we just had selling start up again. Einstein line, there was your signal at 128.15. and just selling like crazy, selling like hotcakes, right? And for those of you just tuning in, this number is the number of ticks. This is the pips. So since selling started, we've gone down 3.6 pips right there. And you can see here I had, let's see, something looks a little goofy there. I think maybe I have to work on that indicator somewhat. But once again, we had these the highest open, lowest opens. You can see here a daily highest open. We had a monthly lowest open there. Went right through it. So it'll make a new monthly open probably tomorrow. Monthly daily open, that is. Frequency distribution. High open and open low. So high to the open on the H1, open at a low. So you can see the types of ranges. If you want to trade right off the open, you can see here, you're only going to get 0 to 9 pips about 73% of the time. Uh-oh, I need to turn the power on. And so you can see here, if you're a scalper, 0 to 9, 0 to 9 pips, that's where you're going to get the bulk of your trades. Or bulk of your profit, I should say. On the range, once again, the H1 range, 0 to 9, between 10 and 19. Now you're wondering, why would this number be bigger? Remember, this is high to open, open to low. So this is one part of the range above the open, and this is the range below the open. And this is the entire range. And once again, looking at the dynamic wicks here, you can see how it's been a long time for a wick zone. So this looks like a good area to possibly look for a reversal to the upside. So you just wait and see if it breaks or not. You can always shift to daily. You can see here what's going on once again. All of this range is being cleared or covered right here. So look for maybe an entry down here below 68 or somewhere right here if we don't penetrate that. See if we can get price to turn back up. So that's pretty much it for today, fellow traders. I hope you've enjoyed the video. Oh yeah, I always forget, you're supposed to come down here, subscribe, then you're supposed to come down here and click the bell so every time I make a video you get alerted. And also, if you know a fellow trader, do me a favor, send them a link to one of my videos, tell them to subscribe, because YouTube is getting kind of funny with I guess, what do they call us? Content providers. So if you wouldn't mind doing that, I would appreciate it. So as the week moves on, just remember, it's not what you trade, it's how you trade it. So get out there and drain the banks.